You brought out the Google problem, by the way, but it's obvious that he didn't consider this. He just got really lucky, in my opinion. But if you own Apple today, you should probably sensitize the value of Apple for not having that $20 billion if this antitrust ruling against Google stands. You also have to accept the $2 billion that Google pays you annually, which comes out to a 99% margin. Yes, depending on the multiple you choose to apply to that $20 billion, that alone might be worth anything from $500 billion to $1 trillion. What's insane is that Apple is still trading at $214, which is 11 to 12% higher than its $185 price at the beginning of the year. The stock is only slightly off its all-time highs, having just recently risen to $230 per share. This is simply an incredible sum of money for both Apple and the company to own. Additionally, Apple currently has more than $100 billion in cash. Nearly $300 billion is owned by Warren Buffett. Allocators have a superior trade, of course, and they desire to make trades. Whether it's the 5% he will receive on the $300 billion or if he wants to purchase anything, I believe he can make a better deal on this. That's an additional possibility. Well done on how you summarize everything. Now, let's turn to the federal judge who decided that Google had a legitimate monopoly in search and advertising. For a few years, this may have been the most significant story in the tech sector. A judge decided Monday that Google had violated the law in order to keep its monopoly on internet searches. Recall that the DOJ filed this case in 2020 while the Trump administration. According to the 277-page verdict, Google paid billions of dollars to third-party platforms like Apple and Samsung to be their default search engine, abusing its monopoly in the search industry. Therefore, maintaining the monopoly is more important than simply having it. Traffic acquisition cost, or TAC, is the term for this. We have discussed it numerous times here. The lawsuit claims that Google handles over 90% of all web searches. We all know that, I believe. The business is contesting that assertion. There are currently no remedies for Google's actions in the verdict. In a later ruling, they will make that determination. Google will undoubtedly resist this. They might no longer be able to pay for Firefox or Samsung to be the default search engine, which would lead to a change in business operations. That will open up a lot of intriguing options. This is very important news because Jamat and I were talking about them on X. I believe this will have a huge impact on the search engine sector. I am familiar with Apple since I worked on Mahalo, a human-powered search engine, more than 10 years ago. Steve Jobs opened it up in the middle of the night and began experimenting with it. Due to their tense relationship with Google, there were numerous evaluations and rumors that Apple wanted to go into the search industry. It goes without saying that Steve Jobs was very displeased when Google and Android began to compete. In addition, Google developed Chrome, a rival to Safari. I don't think it's impossible that Apple will launch their own search engine after losing this $30 billion sale for TAC. Both Brave and DuckDuckGo have fantastic search engines, a search API, and a crawler, of course. People are unaware that Apple has a crawler. According to my forecast, Apple will build its advertising network, similar to that of Uber, Amazon, and other companies, after purchasing a search engine. What do you think about this, and what do you think will happen next? What are the down market effects if this verdict is upheld? This Google incident, in my opinion, is the most significant development in technology since the Microsoft DOJ ruling on Internet Explorer in 2000. Yes, indeed. For over 10 years, this extremely powerful firm was effectively chained by the consent decree from 2000, while several innovations took place. Thus, they lost out on two enormous waves, correct? Due in large part to that consent agreement, Microsoft basically lost out on social media and later on mobile. After that, they were able to catch up and adopt cloud computing and say yes, fantastic. However, this minor result, basically a consent decree, causes Google to be handcuffed for a certain number of years and spurs a few significant waves of innovation from new businesses that might not have been able to thrive without the consent decree. The AI-powered search experiences you're beginning to see, whether they're from OpenAI, Perplexity, or some of these other people, are a good illustration of this. However, the ultimate result is more like to the Melinda Gates case. in which the business is dismantled. Since the likelihood of it happening is so slim, I believe the major consequence is something you can probably fairly rule out. The idea is that this judge will have. Let's discuss that name and many other semis in more detail. Stacy Raisin from Bernstein is now joining us. It's always nice to have you around, Stacy. Let's start with Nvidia. This week's news included some reports on delays that might have been caused by Blackwell's design flaws. Aid, just share your thoughts with me. What will it imply, and is it real? Yes, it appears to be enough real. There is some fire there. There is plenty smoke. Other supply chain participants have provided us with some confirmation. Since Supermicro made reference to it, it doesn't seem like a big deal, does it? It appears to be a small design flaw. It appears like they may have already resolved the issue. We may be delayed by 2 or 3 months. What that actually means, in my opinion, is that although people had hoped that actual volume shipments would occur in calendar quarter 4, it appears that they might occur in the first quarter. It's a little push out then. You must keep in mind that this stuff is challenging. Therefore, even Nvidia may be susceptible to it. However, in the meanwhile, we'd have seen hyperscale capital expenditure guides that continue to rise. Whatever is happening would have been included in all of those. The news story wasn't the only way they learned about this. In order to backfill and smooth things out until the Blackwell actually launches in greater volume, perhaps a quarter later, Nvidia is probably increasing production of their current architecture, known as Hopper, which they would have incorporated. However, I don't believe it's a major structural problem. Now, it's obvious that the stock has been affected sentiment-wise. The stock, in my opinion, has been a variety of things. One was the broad decline in sentiment regarding the AI field as a whole. People are only beginning to notice how much money is being spent and are curious about the return on that investment. Therefore, it wasn't quite as encouraging as it had been. It weights more when you have this on top of it. That's sort of what's been happening, I mean. However, I'm not aware of any significant structural changes at Nvidia. There was a slight push out. It should be all right. All right? Okay. Demand is demand, after all. You mentioned that it's still there. You know what we've seen about the stock itself and the multiple, and I suppose you're wondering if that makes it even more appealing from your point of view. You see, Nvidia has never been very costly. It was about 40 times forward earnings even at its height. That's predicated on sell-side forward numbers, which are probably still too low. It's not too costly, as 40 times is roughly its 5-year median or 5-year average. Now it's cheer. Probably 30 times now. Yes, at least. Going to the back part of this, I believe you've de-risked a little bit. If they do announce a delay, it won't be at this point if they confirm it during the call. We can sort of resolve this because everyone is somewhat aware of it. Demand appears to be very strong. Pushing the volume for the following year actually improves the appearance of that year. I hope the numbers continue to improve. Yes, I believe that this pricing is still quite appealing. We'll get those results next, Stacy. I know you don't really cover this name, but Applied Materials. Applied Materials is what I cover. You do, I see. All right, I stand corrected. Now, as we move to the second half of the year, what are you keeping an eye on there? And how significant of an indicator is that to the larger semi space? Yes, there are several things. China's semi-cap demand has been really robust, and people are obviously keeping an eye on it. As we move into the second half, AMAT is one of the few businesses that has really already predicted that their China mix will be dropping. Therefore, I want to check to see if that's taking place. However, I believe that AMAT may not be as affected by the China overbuild issue as some of the others are. Currently, China accounts for half of the revenue for many of its counterparts. It should, in my opinion, be declining to the low 30% range by the end of the year, which is somewhat typical for them. We'll be keeping an eye on that. Intel was another factor that, in my opinion, has had a significant impact on several semi-caps lately. As a result, there was significant disquiet when Intel just trimmed capital expenditures. However, I will state that Intel followed their capital expenditures guidance for this year, from $33 billion to $26 billion, I suppose they stated. In reality, I had to increase rather than decrease my capital expenditures for Intel. To be honest, I have no idea where that $33 billion figure originated. I needed to raise it to $26 billion from $24 billion. I somewhat removed it the following year. At $24 billion, we have been. I believe that Intel is currently worth between $21 billion and $22 billion. Thus,